Welcome to A Few Minutes with Peter Grandich. I'm your host, Al O'Grady, and for the next few minutes, we'll be talking to Peter, getting his insights on the markets, commodities, business, politics, sports, and life in general. Now, although he never finished high school, Peter Grandich came onto Wall Street in the mid-1980s with no formal education nor training, and within 3 years was appointed Vice President of Investment Strategy at a leading New York Stock Exchange firm. He would go on to hold positions as a market strategist, a portfolio manager at 4 hedge funds, and also a mutual fund that bared his name. Peter has been sought after by the mainstream media, including Fox News, CNBC, the Wall Street Journal, U.S. News and World Report, and the list goes on. Peter is also the founder of Trinity Financial Sports and Entertainment, a Christian advisory firm that he started back in 2001. Now, if you haven't already done so, you can check out his website at grandich.com, where you can also access the Grandich letter, which first came out back in 1984. Peter, as always, welcome back to the program.
Well, thanks for being back. I just want to make one thing. Trinity is not an advisory firm. It's an insurance and estate planning firm, so we don't give investment advice there.
I stand corrected, and I thank you.
Okay.
Yeah, and I thank you for that clarification. So, moving on. Welcome back. We're getting back into the new year, back into the swing of things. If I didn't know any better, Peter, based on our interviews, going back to late last year, reading your blog, listening to some of the interviews, I would swear that you're now part of the Don't Worry, Be Happy crowd and now are bullish on U.S. equities. What gives?
Well, I have said to people, let's take a step back. Very long term, past the next year or so, I am a big bear. I am convinced in my heart of hearts that what we're witnessing or have witnessed in Europe in terms of a financial crisis regarding too much debt will come to the shores in the U.S. in a much worse way. And the longer we avoid it, the longer we keep piling up debt, people putting their heads in the sand, the worse it's going to be. However, and I can't stand that word, however, if, but, or perhaps, which many times make up the connecting to when people speak about things on Wall Street. However, I do think, and it began late last year and has taken us into the new year and still, particularly after the Fed news the other day, believe the least resistance to the market is up. And one of the things I must point out, the only trade I made regarding the general equity market last year was to the long side. And although not a roaring bull, not someone that suggested that general equities not related to metals and mining should be widespread holdings, I haven't shorted the market, something that not only do a lot of people continue to write in and suggest why haven't I, but many bears have literally gotten killed the last few years going against this market. So many times it's not what you make, but what you don't do that keeps you in the game. And so I have not bet against the market while not a bull by any means. As we went into the holiday season, I felt the rally and then talked about this market continuing. And the Fed action this past week, I think, sets stocks up still for higher highs down the road. And this may be the first time I'm saying it, so it'll be an exclusive for you, even the possibility of going towards at or just above the old highs. And one of the reasons I think that is that I think sooner than later the bond vigilantes will realize that despite low interest rates, all this paper creation is detrimental to the future of purchasing power and therefore inflationary. And when I think people are going to continue to move away from stocks, away from bonds, and consider stocks the lesser of two evils. So, am I a member of the Don't Worry, Be Happy crowd? No, I hope not. But I certainly wouldn't bet against them at any time soon. Okay,
purely coincidental, or any correlation to the fact that this is an election year in the States?
That always has some. There is always the hope, and the guy last came in, he ran on hope, and then he had a short honeymoon about hope, and the market, hoped he was right. And there's no question that there's a lot of stuff tossed around, but I really feel this is going to be not that they haven't been already, but I really think this could be a very ugly election. I am watching the Republicans just use just hate advertising. I mean, that's the only way to describe it. And I don't think they're going to get a solidified candidate. And as much as personally, I must declare I am not a fan of Obama, nor do I wish to see him elected. But I would have said to you 2 months ago, before the Republican campaign kicked in earnest, there was no way Obama could win because he was a horrible president. But he may just get in again simply because I don't see the Republicans nominating the one person I like to see,
and that's Ron Paul.
Yeah, and the
I
reason
agree.
is, some people, neighbors and all, I've had pretty heated arguments in the last few weeks, and the reason I say this is this: we're in a fiscal nightmare, and all the other things, foreign policy, education, whatever the other topics that will be tossed around, isn't going to matter if we don't have any money and we're broke. So the first and only thing that I would like to see focused on in America is fixing the decades of ill towards finances. And I don't see anybody, Republican or Democrat, outside of Ron Paul, that gets that. So getting someone in like that is really, to me, the only hope. So if he's not elected, which at this time it doesn't look like, no matter who is elected, I think will not only solve the problem that eventually gets to that nightmare scenario I spoke about, but enhances us there. And no one, including the past President Bush, has moved us faster towards that than Obama did and allowed this just incredible amount of additional debt to have piled on. And this is important. And it's amazing, even when you say it, people just kind of go, oh, I don't really care. What's the weather today? And it's that we're at the point where we can't, after we pay for all our bills, we can't pay the interest off on the debt we own, let alone the principal. So we're past the point of no return. And yet people keep their head in the sand because rather than face it and deal with it, they hope beyond hope. They hope for miracles. So, it's a really bad time. And so we have a window. I think that window's going to stay open now longer than I might have thought a couple months ago. And I think the general equity market, to answer your question, can still work its way higher, and I don't see any major disaster. In fact, I think the U.S. market is all but discounted whatever news comes out of Greece. Yep. And so I guess, again, to say and put an end to it, yes, U.S. equities, least resistance higher, not lower. Okay.
You were talking about U.S. debt, and I think if you're talking about U.S. debt, you want to talk about U.S. bonds. I think it's fair to say that when you call U.S. bonds the worst investment for the next 10 years, certainly makes you bearish. Why do you think that they're the worst investment? I think you've already alluded to some of that, but I'll let you expand on that.
Let's go on that, Al, because right now I think the 10-year is just a little under 2%, and the 30-year is under 4%. If they took my two precious things in my life, my wife and my child, and they said the only way you can get them back is to be right or wrong on the following question: 10 years from now or 30 years from now, would you have made, kept, or lost money in bonds? Without a doubt, I say lose, because that 2% 10-year, I already know inflation is higher than 2%. I don't care what the government tells me. I know everything, what things are costing me is far more than 2% a year. So if I'm putting up money, somebody's paying me 2%, and then I get my principal back, and meanwhile, inflation was 4%, I got whacked over the head. When I get that principal back, I have far less purchasing power. My money's not going to buy the same things it was buying me. So I just think it's worse. I mean, I really think 10 years from now, whatever equities do, it won't be as bad as what bond returns were. So they both could be down, and both substantially, but bonds shall be the worst. And that's, I don't want to skip ahead. I know you're going to ask me about gold, but that's another of the many reasons why I think people going into the gold market, because they don't trust the purchasing power of U.S. Financial assets, particularly bond and eventually the dollar as well.
Okay, you're talking about gold. Let's just pass the baton and continue talking about gold. If there's one market where you've been nearly perfect on, it is the gold and silver market. While many ran for the hills in December, you stood your ground and continued to say that the mother of all bull markets was still intact. Let's see, nothing more than a healthy correction on its way to a new all-time high. So having said all of that, what are your latest thoughts on gold and silver as we head into 2012?
Well, we just, we buried the bears again. They've run back to their holes, bloodied. The close above 1,700 on gold psychologically was the last bastion that any bear could hold on to, that the correction in December was anything more than that. The announcement by the Fed this week of keeping the floodgates open, low interest rates, printing more money, is just a signal to the people who have been accumulating gold, mostly outside of North America, that it's all systems a go. All the things still remain positive. Central banks are net buyers. Companies aren't forward selling it. Institutions are still using ETFs. Physical buying is overwhelming manipulators. Everything is just as good as one can expect. And before the year is out, I think we'll see that magical touch and break of the 2,000 gold, and we could even see silverback challenging $50 again. So all systems are go in my book.
That 2,000 that you mentioned, psychological, is it going to have any sort of significance? Is it going to be, a momentum thing for some people that are staying with gold? I mean, your thoughts?
We'll get all the media to spend its 1% of the time that it does ever on gold. They'll write about it. They'll whip out the bloody bears, again, and probably somewhere it's not too far after that, that'll be the next correction, and then they'll all say, see, now 2,000 is the high, and blah, blah, blah. I said this past week at the Vancouver conference that my good friends like Jim Turk and Bill Murphy and Jim Sinclair, who just a year or two were talking 3,000, 5,000, I used to temper everybody's view, even though I was very bullish, and say, listen, we really have to get something insane or to get up to those numbers. Those numbers don't look crazy anymore. We're really seeing a classic mega bull market, and it's perhaps the most unowned bull market of all time ever in the history of America, that so few Americans have any real exposure to, realistically, what's been the best investment for over 10 years. And I've told the story there, and I've told it before, and I'll give the quick version again, and that is that the U.S. bull market that took place from 82 to 2000, well, the Dow had traded between the 1940s to 1982 between 700 and 1,000. And in 82, it got so bad that Business Week ran a story that said equities are dead. And then a guy that wasn't known at the time named Robert Prechter predicted 3,700 Dow, and people laughed. And believe it or not, when the bull market began in 82, the public in the U.S. was not net long equities to the mid-1990s. It took them about 12 or 14 years, including one big correction in 87, the big crash, before they got to the point where they felt comfortable enough to get aggressively long equities. And, of course, they piled into the NASDAQ, and they ran it up to 5,000, and we probably won't see 5,000 again in our lifetime. But here, too, we see in the gold market just no one of any seriousness in the general public, or for that matter in the professional general community, advocating or buying gold. Almost all of it is exclusively some in Canada, but mostly out of North America. So it's all systems go. And when and if and when the public gets around, and it's probably going to be at much higher numbers, the temptation for us that have been in a longer time is to get caught up in that emotion. But we need to start thinking then that is the classic near the end of the move, and start to look for the exits, not to keep our position or, God forbid, even add more.
Yeah, exactly. All right, gold, not the only precious metal on your radar, something in the way of base metals. You said at year's end you thought zinc was a metal for 2012, and it's rallied nicely. So do you remain bullish on it and really base metals in general?
Well, yeah. I think it was maybe 2 or 3 years until this past Christmas that I was neutral to bearish on base metals. I had constantly said to greatly overweight in precious metals, but changed that opinion and felt zinc, which was down in the low 80 cents, could rally back to $1, which is pretty close. It's rallied to about 95, 96 cents. Copper has held up real well. challenging $4 again. And base metals in general, I just think have seen their lows. Now, some may not do as well as others, and some may underperform gold and silver. But I think net they'll be up. So yeah, I'm favorable to base metals again, and it opens the door to have more exposure than just the limited precious metals view that I had for a couple of years.
Okay, I see that you're now saying to avoid natural gas, but you're still bullish on oil. I thought the two went hand in hand. Yes, no?
No, and the budding natural gas bond market, that bull market this saw busted, and that's because there's just been an absolute inundation of supply in natural gas, which is kind of foolish because here's the U.S. and again this pipeline out of Canada was another foolish move. I think it could be the worst economic decision the U.S. ends up making in its history if we don't end up doing eventually the pipeline. But we have such an abundance of natural gas, and in one generation we could switch over. Sure, we may not be able to drive Lexuses anymore, but we could drive cars that would get us around, and we seriously wouldn't care what was happening in the Middle East because we wouldn't need oil to the extent that we needed. But there's just so much of it, and thankfully, I avoided the shares because they are really, still way overpriced because, natural gas is busted. So there's no quick turnaround for natural gas, but the oil story is the opposite end. It's really, as I felt, building a base now to make 100 the low end of the trading range for years to come. And there's just a budding Middle East problem that, could add even more of a premium to it. So, like oil, avoid natural gas until further notice.
Okay. All right. So for the last few minutes, really, we've been taking a look at the economy from a macro perspective, talking about some general themes in some different areas. Let's go to a more micro perspective and maybe talk about some individual companies that could be on your radar. Anything that grabs your attention?
Well, I'm going to talk my clients, which many is my book. Many of these I own in a big way, so there's a lot of potential conflicts of interest. One of the things I spoke about in Vancouver is I think there's going to be a much more mergers, acquisitions, and consolidation, not only in the mining, but in the exploration end of business. There's just, the big producers are just searching desperately for reserves. So I think we're going to see a lot of acquisitions, more than we've seen in recent years in the metals and mining industry. So maybe I'll just run down, think about my client list. First, Alderon, iron ore. I just, people know I've called it the son of Consolidated Thompson and how it went, and it's trading that way. The next two pieces of news will be port access and then an offtake agreement, and then I just think it's on its way after that. It won't be independent this time next year. A company I spoke about as we speak here late Friday morning, which is probably the most active stock on the Toronto Exchange today, Geologic Exploration. It is trading huge volume. I doubled my position as it personally this morning. I've written about how it has a project that's worth far more than the market was valuing at it. And when a study comes out in April, the hope is it will demonstrate an extremely viable project that I think will make it a takeover candidate. Lithium One, the rare earth metals market blew up, and I don't see it coming back in any way, shape, or form for quite a long time. However, when things blow up like that, sometimes the baby gets tossed out with the bathwater, and one of those companies would be Lithium One. They perhaps have one of the best lithium projects in the world today, and the few that more than survive are going to look to take advantage of the down markets, and I think Lithium One is a prime takeover candidate. Let's see, I'm trying to think alphabetically. Perhaps my Albatross, the one that I wish I never got involved in because it's taken years and still hasn't happened. But we have to continue to suggest that it is, because I think it will be eventually. Northern Dynasty, I mean, that's just, despite all the environmental news and all that type of stuff, I think at the end of the day, one of the majors has to have it. Orem in exploration, I own that too. As I noted, in early December, the company put out a release that it wasn't acquisition talk, and until such time something happens, it wouldn't comment, and nothing's been commented since then. So the first thing I take away from that is they still must be in talks, because if the talks ended, you would think they would have to tell us. So I think that's a candidate. Sunridge Gold, which I own so much of and is starting to break out now, it's moved up nicely and it's getting to the point where it can start to run. Just put out some really good drill results on a secondary project of theirs, a project that a lot of companies would love to have as their prime project, but this isn't for Sunridge. And now in the next couple of months, we're going to see all sorts of news on, and I've said this for a few months now, that their projects were worth many times their total market capitalization, in my opinion. Timmins Gold, which I don't own any shares right now, but it's either going to make acquisitions in Mexico or be acquired, because it's in an area where there continues to be a lot of mergers and acquisitions. And I guess finally, a stock in an area of the world that 20 years ago everybody looked at, now no one does when it comes to gold, South Africa. I really favor Wits Gold, again, with all the prejudice and biases that come along with being a client of mine and me owning shares. But it has $100-something million of potential gold resource. It's being valued at about $1 or $2 in the ground. And a gentleman who originally was involved in another company I work for and did well there is taking control, and he's suggesting that we're going to see a lot forward movement on Wits Gold in the not-too-distant future. So I think that would be a good enough, and more importantly, rather than to get any interest in any one that I spoke of, just look for more acquisition. The market selling off in the way that it did at the last half of last year, the junior market, really brought things down to insanely low valuations. A lot of companies, far more than I mentioned, have very advanced stage exploration projects that majors will look at that were selling for 20 or 10% of what they were selling maybe 6 months or a year before that. And I just think the majors got to be looking at that and have a shopping list.
Okay. Now, of the companies that you mentioned, I just want to piggyback on that. You had mentioned Sunridge. Check out my website, corporateinterviews.com, if this is how you're accessing the interview. I have done an interview with Sunridge recently, so these interviews are archived. And you also mentioned Geologics, and we're hoping to have an interview with the president and CEO of Geologics in the next week or two. So for the sake of our listening audience, if you'd like to follow the companies that Peter likes to follow, and you're doing your due diligence, by all means, check out the interviews that are archived on corporateinterviews.com regarding Sunridge and also Geologics in the next week or two. Peter, I'm going to go to the mailbag. Well, I guess that's an old acronym, really the email inbox. I think that's more accurate. Question from one of our listeners. This is from Roxy. Roxy says, I own paper stock certificates for a certain company. Should I request new paper stock certificates in the event that the company does one of the three, split, merges, or gets taken over? Your thoughts? Well,
most people keep their stock holdings in street name, which means they keep it at a brokerage firm versus taking the certificates. It's much easier that way. If and when you ever sell, you got to deliver the certificates. God forbid you lose it. It's a heck of a process to get new ones. Some people are concerned about having them in street name for a couple of reasons. One, if the firm goes under, there's a delay in getting the certificates. Two, it can be lent out to be sold, to be shorted. And sometimes people think, especially when they own stock in a stock that has a large short position, they're actually helping the shorters by providing them stock to be borrowed. My personal thing is I've always held and kept all my stocks in street name at a brokerage firm. But if for peace of mind or just like to show off, one thing is if you have the certificate and there is a split, you're going to have to send the certificate to the company to get a new certificate based on the new split amount. So more times than not, it's best to keep it in street name.
Okay, fair enough. Short and sweet. That's it as far as formal questions, Peter. Last word, any parting shots?
Super Bowl, baby.
Okay, so it's New England all the way, huh?
No, for me it's special because, I work with these guys. I've probably been with them 10 or 12 Wednesdays of this year doing Bible study. And when I say it's, we have as few as 3 or 4 to 12 guys, so it's not even close to the whole team. But I got to know these guys. I really love them. I mean, I'd be prejudiced if I pointed out a couple versus another, but Tuck and Canty and Nix, who are always with us at Bible study, they're great young men. Two are married, but any of the three, if they weren't, they could date my own daughter. That's what great gentlemen they are. And, people see the bad guys, and the bad sports guys. I got to see some of the good guys. Now, there's probably good guys on New England, too. Maybe there was even one or two on the Cowboys.
At least one or two, yeah.
Okay, but the bottom line is, I'm pulling them for a lot of special reasons. But, this is going to bring excitement because there's a lot of people in New England that says if David Tyree doesn't catch the ball across on his head, New England wins, and they want revenge.
How many times are we going to see that pass play?
Well, Dave,
in the next week or so.
He was already on Fox last night. He's a good friend of mine. He's on my board in my other company, and he probably has 40 interviews set up already, and we're going to see that 100 times.
Oh, for sure. But you got to remember, New England's going to want payback because the Giants spoiled their perfect season a couple of years ago.
What you want and what you can get will be two different things. I think New England's defense is highly susceptible. I think the Giants can score on it. And I think the Giants have enough of an offense to keep track with Brady. I think the Giants win it, but that comes from an extremely biased and prejudicial view.
Okay, well, we will do our best. Maybe we can have another chat, have another interview before the Super Bowl. That's certainly our plan, but you never know.
Want to bet one of those coffees? What do you owe me, like 6 coffees or something?
Oh, 6? I think I owe you a franchise, don't you? A Tim Hortons franchise? Or in the States, you guys have Starbucks. Here in Canada, we have Tim Hortons. So, in any event, Peter, as always, thanks very much for your time, and hopefully we can get together next week and we can talk over some of the economic events that investors will be interested in.
Thank you, Al.
Okay. And this interview will appear on my website, corporateinterviews.com. It can also be accessed on YouTube and iTunes. Just type in Grandich in those respective search engines to not only access this interview, but interviews that we've done in the past. Now, if you have any questions for Peter, just like Roxy did or had, by all means, send me an email. My email address, pretty simple, al@corporateinterviews.com. And we will certainly do our best to mention it on our next program. But please keep your question very generic in nature and not company specific. Having said all that, for Peter Grandich, I'm Al O'Grady. Thanks very much for joining us.